Hello, everyone. Just gonna wait till we get some more people in here before we get going. Hope everyone's having a fantastic day. Let me know if you guys can hear me. Rob, can you hear me?
Yeah, I can hear you just fine.
Perfect. All right, guys, it's 7 o'clock. We just want to get started. Really, we've got a lot to cover. So thank you all for joining. Welcome, everyone. We'll just wait for another minute or so before we continue so everyone can join in. We do have a lot to cover, like I said. I'll just go ahead and introduce myself in the meantime. My name is Sid, and I'm a pre-construction agent and specialist here at Teamster Real Estate. I purchased my first pre-construction property in 2015, which I still own, which I've used to purchase several others and scale my real estate portfolio. I'm currently sitting at 5 properties. When I first started out, I had no idea about real estate investing, leveraging, refinancing, or any of the terms that I talk about daily now. I was working 9 to 5 as an account manager. I was making decent money, but I noticed everyone around me was investing and growing their wealth, whether through stocks or crypto at the time or real estate. So I took a leap and bought my first pre-construction condo. And once I understood the power of real estate and leverage, I really wanted to help others around me. And with that, I've been a licensed real estate agent now for 4 years, and I've been helping clients get into real estate investing ever since. And Sarab will introduce himself.
Thanks, Sid. Hello, everyone. Welcome to our first pre-construction seminar. So my name is Sarab, and I'm the team lead for Team Sewer here. And I am a proud investor as well as a realtor that helps other investors. My investment journey really started at when I was 22 years old back in 2007, when I bought my very first property in Waterloo for $188,000. It seems like so little money now, but it was a lot of money for me back then. And I continued to grow and scale from there. I became a licensed agent back in 2014, primarily for myself, because I wanted to continue to invest and also then to help others do the exact same.
Awesome. Thanks, Rob. So guys, this presentation should last no more than an hour. We do have a lot to cover and we want to be respectful of the time. So we'll be covering a high-level overview of pre-construction condos and investing in pre-construction. We'll also do a quick Q&A at the end to make sure we answer everybody's questions. So please write down any questions you have in the Q&A box that you see in the window somewhere.
It's in the top right, the bottom right corner for anyone wondering where that Q&A box is.
Perfect, guys. So let's get right into it. Some of the things we're going to cover is, why invest and why invest in real estate specifically. We're going to go over the pre-construction process, how it works, when to buy, when we buy, when clients buy to make most money. We'll do a market update and where pre-construction is headed and the future of pre-construction really. And then at the end, we'll cover some projects that we feel are really, really hot right now that I think everyone should be looking at if you're seriously considering pre-construction. And of course, we'll finish it off with the Q&A.
Amazing. Thanks, Sid. So why invest? Well, I'll start off with a quote by one of my favorite people. It goes, if you don't find a way to make money while you sleep, you will work until you die. It's posted all over our office as well. So, as Canadians, we are living longer. 70% of Canadians are concerned that they won't be able to save enough money for retirement. This was a poll taken by Scotiabank. 66% of Canadians are concerned that they have underestimated how much money they will need in retirement. And these are some of the conversations we have with people every single day. Your money in the bank account, even in a savings account, is losing to inflation. A lot of people are telling us, hey, we're able to get 4.5% interest rate right now in the savings account. The reality is, as of September, inflation is still at 6.9%. So you're truly losing about 2% back to inflation. And lastly, generational wealth. This is why I do it. I have a 4-year-old daughter. That's who my go-to is now. That's the reason. That's my why of why I continue to invest as well. I want to be able to pass something on to the next generation, to my daughter, and then hopefully she continues to do the same. Okay, so the next we're going to go over why pre-construction. Again, a quote by Andrew Carnegie: 90% of millionaires got their wealth by investing in real estate. And I'm a true testament to that. I started off with really nothing in my own bank account when I was 22 years old doing my first investment property. And I've accumulated over $13 million worth of property, over 15 doors, and a portfolio worth about $13 million. So why pre-construction? I love pre-construction for some of these reasons, and some of these reasons you guys should also be looking at pre-construction. It truly is a very passive opportunity for you to invest, park your money, and really let it grow. It is the true ultimate leverage. You are able to invest in a condo with just 10, 15, 20% down, and able to leverage in the entire 100%. You don't require a mortgage at all. In newer inventory, it outperforms older inventory. What I truly mean by that is anything new really outperforms something that's old. So we're going to give you a QR code here, guys, for any of you who want to talk about your personal portfolio and what this looks like for you, if pre-construction makes sense for you or not, or if you truly feel that, hey, maybe there's a lot more opportunities for you in resale. If you want to have a one-on-one call to discuss further on your personal portfolio, please go ahead and scan that code. Sid has also put a link in the chat for you guys to book a call with or a Zoom meeting with either Sid or me to go over what you're going to do personally.
Awesome. Thanks, Rob. So I want to go over some pros and cons of pre-construction. This is something I go over with each and every client whenever we do a consult, just to see, again, make sense, just to see, make sure that you guys are aware of what the pros are and what the cons are as well. It's always good to know both. So one of the pros of pre-construction that I think a lot of people are aware of, or maybe not, is you have an extended deposit structure. Unlike resale, where you have to put up your entire deposit of 20% as an investor up front, and get a mortgage. In pre-construction, you pay your deposit slowly over an extended period of time, typically over 3 years or right before completion. Typical deposit structure will be $5,000 on signing, balance of 5% in 30 days, 5% in 6 months, and 5% in 18 months, and the last 5% on occupancy. So it's really stretched out. It forces you to save money to make sure that you have those deposits accounted for. With that, you also have, because you're waiting for the building to be constructed, you're also banking on future appreciation or capital appreciation, really, and for the values of the condo to go up, which is another very, very huge advantage on buying pre-construction. You've got time on your side to build equity. As Sarah mentioned earlier, you don't require a mortgage at the time of purchase. You're also buying something brand new as opposed to used. So your appliances, your finishes, everything is brand new, which also means in Ontario, every single new home and new construction comes with Tear-on warranty, which allows you a warranty in that unit for up to 7 years, including structural or any deficiencies by the builder. So some really, really good advantages there. With that, also, there's some cons, right? So what are some of the cons of pre-construction? You're essentially buying something that's not ready. You're buying something off of a floor plan of a piece of paper. You're not, you don't have that excitement of walking through a unit. You can't touch, see, or feel it as you would when you walk into a house or a condo now. You will have wait times and delays in pre-construction. That's just the nature of construction in the city, and with labor and supplies, there's always going to, and the city, there's always going to be delays. You also have additional closing costs outside of what you see in a resale purchase, which we're happy to go over. It will vary from project to project. One of the main, additional closing costs are development charges and levies, and we'll kind of get more into that in a bit. I want to talk about phases of construction and phases of sales and pre-construction and how that works. So before a builder even breaks ground or starts construction, the builder will pre-sell a portion or a large portion of the building through phases of sales. So the first round of sales and pre-construction is called a platinum sales. This is when the builder first releases their first round of inventory or the first round of units, and they only give access to a handful of agents around the city known as platinum agents. As an investor, this is the time, and this is really the phase of sale. You want to buy a unit because this is where you experience the maximum return on your investment, because this is when the prices are lowest. Right after that, they open up some more units to VIP agents during the VIP sales. round. With that round, you're seeing prices go up slightly. Right after that, they'll open it up to general realtors around the city. So your average realtor will get access after that point, where prices, again, at this point have gone up quite a lot. And lastly, you're seeing the general public sales, where the builder just really allows everyone to come in and walk into the builder's office and pick up a unit. With each phase, you're seeing prices go up. I've seen prices go up $50,000 in some cases through rounds. It really depends on the project and how much demand there is. But the builder typically wants to sell at least 70 to 75% of the building in order to get their construction financing to make sure that they at least sell that much before the building is ready. Phase 2 is when construction begins and the builder's broken ground and they've started construction. This is typically the time when a lot of builders will call you in for a decor appointment to select your finishes, your color palettes, etc. After that, you've got the interim occupancy period. This is the period when the building is actually, or the unit rather, is actually safe to move into, and the builder will hand you your keys and say, here you go, here are your keys. The unit's ready and safe to move into. At this point, you also have the right to lease during occupancy. If you're an investor and not planning to live in there, you can lease the unit out to a tenant. You also have the right to assign at this point, which means you have the right or ability to sell your unit before you close, and I'll get to that in a second. And lastly, you have occupancy fees. So when you occupy a unit during the occupancy period, you're paying the builder what's called occupancy fee, and they consist of three things. They consist of the interest on the balance that you owe the builder so far outside of your deposits, maintenance fees, and property taxes. Those are the three things that make up your occupancy fees. Now, occupancy fees can last anywhere from 3 months to 6 months. I've seen them go up to a year, sometimes could be even longer. It really depends on the size of the building, how many units there are, and just the registration process by the city. And lastly, you've got the phase where the building is registered. Once the builder applies for the condo to be registered and the city goes ahead and registers it and the title over to your name, that's when you have to go and get a mortgage from the bank and get a loan. So there's really two closings in pre-construction. You've got the occupancy period and you've got the final closing when the building is registered and you have to get a mortgage. In that time, you're paying the builder occupancy fees every month. Now, very important, if you're an investor looking to rent it out, that you want to make sure you have the right to lease so you can lease it so you're not paying out of pocket. Anything to add to that, Saurabh?
Yeah, no, you covered it. You covered it pretty good. And after that is really truly your final closing, where you have to go and get a mortgage, which is the last phase after the occupancy period. Now, it's very important that the right to interim occupancy, the right to lease, and the right to assign, especially, is noted in the agreement of purchase and sale. Simply because most of these pre-construction projects, as Sid mentioned earlier, could have delays. Your situation could change in 4 to 5 years, so you want to make sure that your interests are protected. So make sure that you have the right to lease and the right to sign in the purchase agreement.
And we'll get to the incentives in just a second. I want to talk about choosing your units. This is especially important in the beginning stages when you're first looking at a launch. You may see a lot of ads or emails even from us maybe that's saying, hey, there's a launch coming up. What that means really is that launch time is when the builder is releasing units at that platinum stage where they're only allocating a certain number of units. And so there's only a handful. They're not releasing the entire building. A builder will never sell out an entire or want to sell out an entire building right away. They want to slowly increase pricing. So again, I want to stress that platinum stage is where you want to buy in the first round. And in that time, you want to be flexible with your unit choices because you also have several other people who may want to buy a similar unit to yours. And because there's a limited amount being allocated and sent out by the builder to a handful of agents, you want to keep your choices flexible. So you want to always have a variety of choices. Don't be married to one particular unit or a layout or a floor or a view. Be flexible between the bedroom suite types, the floor, and even the direction that you're facing, especially as an investor, because you're not going to be living in there. The more flexible you are, the better your chances of getting a unit at that stage. So I want to cover the incentives in pre-construction and why a lot of people really are drawn towards pre-construction, including myself, is one of them being the extended deposit structure that I covered. Very attractive. We're seeing builders now offering some really, really good deposit structures that we typically don't see. So that's another way to really leverage your purchase and make sure you make the most amount of money out of your deposits. You also have capped development charges. This is what the city or the municipality will charge the builder to build on that land. They have to account for parkland levies, educational levies, any sewage, any sort of infrastructure that they need to account for because they're bringing in more people into that area. And the builder will then in turn go ahead and pass those costs on to the unit owners because, again, they don't want to break into their profits. So very important that when you buy pre-construction that you make sure these development charges are capped, that you're not paying an exuberant amount of money, like, $50,000 or something. Typical development charges caps for 1 bedrooms are anywhere from $12,000 to $15,000, and on 2 bedrooms is between $18,000 to $22,000, but it really varies from project to project. Another incentive you want to be really look out for is the right to assign, which means you want to make sure you have the ability to assign the unit upon occupancy. Look, things happen in 3 years' time, 4 years' time from the time that you purchase. You don't know what your future is going to look like. You may run into financial constraints, or you may not be able to close on your property for whatever reason. You may even decide to leave the country. That's where the assignment clause really comes into play. You want to use the assignment for that reason. And so you want to make sure you have that right to assign in there. A lot of times we see a lot of builders offering this at no cost. I think the only thing you have to pay for nowadays is the vendor's legal costs, which can be $1,000 to $1,500. But other than that, it's a free right. You also, again, like I said, have the right to lease during occupancy. You want to make sure that's in there as well. I'm going to cover the 10-day cooling off period. This is something that's unique to pre-construction outside of resale. The 10-day cooling off period is really a government mandate where anytime you buy new construction or new condominium in the city or anywhere in Ontario, really, you have a 10-day cooling off period, which means from the time that you sign your agreement of purchase and sale, you have 10 calendar days, not business days, to really back out of the deal for any reason. Okay. Now, we primarily use this 10-day cooling off period to do our due diligence. The due diligence being, you want to make sure you get an agreement reviewed by a very competent pre-construction lawyer to make sure that they go through all of the clauses in the agreement. These agreements are very long. You want to make sure you don't miss anything. So the lawyer really goes through everything and make sure your interests are protected. We work with a very competent pre-construction lawyer on our team, and he reviews all of our clients' agreements. And this is a service that we provide to our clients at free of cost to them. Okay, there's no cost to them for this. You also want to make sure you get your pre-approval letters arranged. Again, this is a letter of intent in a lot of cases that the builder requires from purchasers. You don't have to necessarily go and get a hard pre-approval or firm pre-approval from your bank, but a letter of intent saying that you have the ability to purchase. We also help our clients with the arrangements if you need at no cost. This is also a time you want to make sure you prepare your post-dated checks so you're not scrambling around ordering checks at the end. I've seen recently some clients who had to order checks from their banks, and that does take a little bit of time. So make sure you get that done in that period as well.
So I'll go ahead and cover an assignment sale. I typically advise on assignment sales as a backup strategy to be able to exit out of a pre-construction deal. Some people have this as their plan A. But truly, it should really be a plan B or plan C. So what is an assignment? An assignment truly is when an original buyer of a property, that is the assigner, allows another buyer or the assignee to take over the buyer's rights and obligations of the agreement of purchase and sale before the original buyer closes on the property. That is when they take possession. In layman terms, what it truly means is you're flipping the agreement that you bought from the builder 4 years or 3 years or whatever years ago, until the building is completed, and at which point you're flipping that paper onto the new buyer. You're getting your deposit money back plus any profits back. It is, I've always used this as an exit strategy for getting out of pre-construction deals. As Sid mentioned earlier as well, that, life changes, life happens to everyone. You are, it's pre-construction deals are usually closing out in 3, 4, 5 years out. So having an assignment sale as a backup strategy is a great way to be able to leverage any pre-construction deals. Now, in today's market, you are seeing a lot of the assignments for people that bought 4 or 5 years ago. And the reason I use this as a backup strategy really is because of that reason, where people that bought 3, 4, 5 years ago, they are now stuck because the market has shifted. So it's a great way of using a backup, but it should not really be a primary. We in Team Sue, we truly believe in buy and hold, and it really should be a buy and hold strategy long term. However, I will give you an example of an assignment sale that I did for a client of mine. We had bought this property in Mississauga at 4655 Metcalf. It was a Pemberton building. We had bought it in 2018. It was 900 square feet for about $465,000, about $517 a PSF, a price per square foot. They had put down about 15% down, about $70,000. I ended up assigning at the beginning of the year for about $705,000, which was about $783 a square foot. This was true for him. Again, life had happened. His situation had changed, and he ended up profiting. So go to the next slide, please. Yeah, so he ended up profiting 705,000 minus 465, about $239,000 profit. He had only put down a deposit of $70,000. He ended up profiting 239, which is about 343% return. He did not have to pay any development charges. He did not have to get a mortgage. His assignment was also free. We had made sure that to include the assignment clause at the time of purchase. So it can be a great way of leveraging, but again, should not be used as plan A.
Yeah. Also important to note that that number that you see, that was his gross return.
Yes, that was his gross return, correct.
Yeah. So on that, he had to pay fees, obviously, lawyers' fees, real estate commissions, and any capital gains. But at the end, he still, I think, ended up taking away over 180 or so net.
Correct.
So yeah, again, like Saurabh said, very attractive, but have that as your exit strategy.
So how does an investor continue to make money from their purchase, especially if you're buying pre-construction? Again, it's very hands-off, very passive investment opportunity. It's great. Pre-construction can really be great at times like these where times are uncertain. With today's high interest rate, if you go ahead and get a mortgage, anything that you really truly buy would cash flow negative. Pre-construction is a way for you to still enter the market, still buy something that's going to be ready 3, 4, 5, 6 years out. And ride out that appreciation until the market comes back. We are expecting the market to come back at some point. I wish I had a crystal ball to tell you guys when it would come back, but at some point, probably in the next 2 or 3 years, the market will come back to sub 3% rates. And again, it allows you that process of riding out this uncertain market until 2025, 2026, 2027, and ride out that appreciation during that time. How to use pre-construction for leveraging. Again, when I started off as a brand new investor, I knew nothing about leveraging and what advanced strategies were available to me to be able to scale. I just thought I had to keep saving 20% down and keep qualifying at the bank to be able to buy my next property. It is far from the truth. I had bought my first one. It allowed me to buy my second one. What I did was, what you truly want to do is if you buy a pre-construction opportunity, at the end, when the property closes, if you had written out that appreciation, you would ask the bank to refinance that property. So you're taking a higher mortgage, but you're able to take your initial down payment out and any profits out, and then go ahead and repeat the process again by buying either something on the resale side or something on the pre-construction side again, and then writing that waiver band. So you keep doing that. You have 3, 4, 5 properties, and it becomes way easier to buy your next property. In the very beginning, if I'm going to give an example for myself, I had started with one. It allowed me to buy the second one. The second one allowed me to buy 2 more. And then now my goal has been to buy 2 to 3 every year, but only because that I was able to leverage my other properties to buy more. So, Sid, I think you're going to cover the slide, why is pre-construction so expensive?
Yeah, so I mean, this is a question that I get, from clients, especially new clients who've never invested in pre-construction before. They go, "Hey, pre-construction's looking expensive," and it is. Pre-construction, if you look at compared to its resale counterpart, given that it's same area, same suite type, similar finishes, you will notice that pre-construction is really anywhere from 20 to 30% more than a resale is. And of course, one of the reasons for that is it's something that's not ready yet. It's ready in a few years' time, in some cases 4, 5, 6, 7 years out. Saurabh and I bought a property that's going to be ready in 2028, right? So we're buying a lot of time. So a lot of times you are, buying into the future values and letting the appreciation do its thing. But there are other factors. Builders are not just coming up with the pricing for these units out of thin air. A huge part of where the cost really goes, and Saurabh will cover the cost to build breakdown after this, is the government fees, taxes, and levies. They really account for 20% of your pre-construction condo price. There's a lot of restructuring going on at Terrion that has increased wait times by months. And we all know there are a lot of red tape around the approval process in order for builders to get their approvals. There's outdated and unrealistic green belts that put a strong hold on urban sprawl and development. We're restricted by how much land we have here because of the green belts that we can't build upon yet. And I don't know if that's ever really going to happen, but because we have that limited land, we can only build so much. Of course, there's vast increases in construction costs and labor shortages. So with the cost of labor going up or cost of construction going up and the shortage of labor, we're seeing, again, increased costs, and we'll cover that breakdown here in just a sec.
Okay. So I'll go over and cover that breakdown. This slide really talks about an average condominium of about $750,000, and it really gives you that breakdown of where that money is going. So if you look at that typical condo of 750,000, from a builder's perspective, how that breakdown truly works out to be ultimately is the value of your land accounts for anywhere between 10 and 30%, unless you're a big builder and you've been sitting on that land forever, which very few builders are really able to afford to do at this point. Construction costs account from 30 to 40%. That truly is the biggest expense for them, in 2022 and moving forward. Soft costs are anywhere between 14 to 25%. Government charges, which is a breakdown on the left side, it gives you between 18 to 22% are government charges. And then the builders are left with a profit margin of between 7 and 13%. Now, just to give you perspective, about a decade or so ago, the profit margins for the builders, because the government charges were much lower and so were the construction costs, those profit margins were all in double digits. It was very uncommon for a builder to take anything in the single digit returns. Now the builders are getting very, very squeezed to take a very low profit margin. Hence, you're seeing so many cancellations happening all across the GTA. You're having projects cancel out that were sold 4 to 5 years ago. They just can't afford to build. These were, if you truly look at it, these are very there were builders that were inexperienced. They were not, some of them were not vertically integrated. What I mean by that, they didn't have the construction crew, they didn't have their own sales processes and so forth and so on. So they're really squeezed, and nobody was going to build for a loss, and hence they ended up canceling the projects.
Yeah, and as you can see in this example of $750,000, the total government charges would typically account for close to $160,000, which is just over 21% of the cost of the pre-construction unit. Inclusionary zoning. Now, this is something new that I'm not sure how many of you have even read on the news. Maybe you have, but this is something that really started causing a lot of buzz earlier this year. The City of Toronto has voted in inclusionary zoning for all projects that are submitted after September of 2022. So not the developments that are currently selling, but the ones that projects that are submitted for approval after September of 2022. And according to that mandate, a minimum of 5% of all new development will be set aside for affordable housing, which is low-income working individuals that meet certain thresholds. Now, due to developers already having low margins, this cost will be passed on to you and I, the buyer. Based on our research, we see this increasing the purchase price by approximately 8%, which really a one bed in the City of Toronto, you're looking at over $60,000 or more overnight once this is implemented. And what does this mean for the average buyer? So initially, we feel that these projects will be stigmatized and demand for pre-construction will drop significantly. Developers will stop building in the City of Toronto and build outside in the GTA, where inclusionary zoning is not yet in effect. This will lead to increase in resale condo prices due to, again, lack of new inventory and increase in demand. Suburban pre-construction prices will skyrocket for the next few years. Why pre-construction prices won't drop? Well, look, land is not going to become less expensive. There's obviously no new land that's being created. Government fees are only going to increase. Development charges were just increased by almost 49% over the last year. So again, that cost is being passed on to the consumer. Immigration. I don't know if you guys have been following headlines, but Canada introduced the largest number of immigrants last year of all G7 countries, and it's going to bring in another 1.5 million new immigrants over the next 3 years until 2025. Because of the backlog of immigration during COVID, immigration is rampant right now. And immigrants, when they come in, they're all going to need a place to stay. Majority of them are going to come into the GTA, and a lot of them are going to end up buying over the next couple of years of being settled. So demand is only going to skyrocket with the already short supply. Now, people ask me, what if sales slow down in pre-construction? Well, if pre-construction sales slow down, pricing is not going to come down. Developers will not really screw with their already low margins. They'll just opt to not build. And if they don't build, we don't have any new inventory coming into the market. We're already, that number's low now, but we're already over 30,000 units short to market every year. No new inventory plus equal to or greater demand will cause resale to skyrocket. And then we just keep repeating the cycle of value skyrocketing. Guys, again, a reminder to book a call if you guys are looking to get more value out of pre-construction just based on one-on-one needs and whether or not pre-construction is right for you. There's a link also in the chat to Calendly to go and book a call. I'm going to leave this up here for another second. You guys can scan it, but there's also a link in the Calendly. We'd love to talk to you about your own personal requirements and needs.
So I'll give you guys a market update. As a matter of fact, I did want to add something to Sid's point earlier. Sid had said that immigration was, at its highest. Actually, there was an article just yesterday that Government of Canada has now increased their immigration by target for 2025 to 500,000 immigrants. It has continued to go up. When I immigrated to Canada back in 2001, that target was nowhere near. And then over the years, we're at 300, 350. Now we're almost 500,000 immigrants a year. So just to Sid's point, I think the demand for housing will continue to go up. Yes, we're in a very uncertain time right now, but I think long term, that's how we are. We're long-term investors. I think long term, we're all going to be fine. Now, market update. What's happening? It's one of the biggest questions we're getting asked right now. Hey, what's happening? What's happening? When is the market going to bottom out? Let's just look at the facts. The facts are the Bank of Canada have raised interest rates 6 times in 2022. Inflation, we're sitting as of September. October numbers are not out yet, but inflation at its peak was probably June. We're sitting at over 8%. We have started to come down because of the interest rate increase, which was really truly their mandate. If you really look at Bank of Canada, they only have 2 levers to increase interest rates for us to stop spending money, and then to decrease interest rates for us to start spending money. Inflation as of September of 2022, we're sitting at 6.9%. Now, what has this really done? It has really created a slowdown in the market. Buyers are in the sidelines. When buyers have uncertainty, they do not purchase. And that's what we're seeing right now. On the other side, we're still seeing a low amount of inventory in the market. September stats had come out. We had the lowest amount of inventory. There are fewer homes to choose from. Now, once interest rates start getting down, there is still, these buyers have not evaporated once you start. And that's exactly why you saw this summer, the rental market just being on fire, simply because those buyers chose to rent. There's still a big pent-up demand for Canadians wanting to own their own homes. So I think as interest rates start coming down, as buyers start qualifying, you will see that that pent-up demand from buyers wanting to come down, wanting to purchase homes for themselves. So what does that truly, another slide, Sid? So what does it truly mean? Sid, can you just click one more time? Perfect. So what does this truly mean for you? I'll start off with, again, Warren Buffett saying, be fearful when others are greedy, and greedy when others are fearful. So is it a good time to buy? When is the market? The number one question, again, when is the market going to bottom out? Again, we don't have a crystal ball. We don't know when the market will bottom out. Are we near a bottom somewhere? Probably. Are we in a bottom right now? I don't know. We're probably near at some point of a bottom. I was hearing Benjamin Tal last week. He was in our office meeting. They're saying that probably by April, we're going to start seeing when interest rates stop going up. We're probably going to expect one more interest rate hike in December. Once that happens, buyer certainty come back. And by April, at some point, you're going to start seeing a robust market again. I don't think we're going back to multiple offers by next year, but definitely there's going to be movement in the market. So anytime between now and April of next year, I would probably assume is the bottom. So is it the right time to buy? Again, if we believe in buy and hold, we're long-term investors. We don't try to look for the bottom. All we look for is it a good time to buy? I'm not competing with 30, 40, 50 buyers. I'm going about and choosing my units, choosing my views. It is the right time to buy. There are builders realize that there's a slow time in the market. Builders still continue to build because they have massive staffs. That's all they know how to do. So builders will continue to build. On the flip side, they realize that the market is slow, that they need to offer incentives to the buyer. And that's why the 3 projects that we're going to pitch to you at the end of our presentation today, you're going to see some amazing incentives. Some of those incentives we haven't seen in pre-construction for a number of years. And again, going back to choices, you have a lot more flexibility and a lot more choices right now for purchases.
Yeah. I want to add to something that Saurabh just mentioned is, now more than ever, it's very important to make sure that if you're buying into a pre-construction project, that you buy into the right project and the right developer and the right builder. Times are uncertain, and you don't want to buy into a project or into a builder that doesn't have a lot of experience, that doesn't have a good track record, or doesn't have their financing in place. Because the last thing you want is a project getting canceled, which we do see from time to time. Do you get your deposits back? Yes, you'll get your deposits back, but you lose on a lot of time, okay? You don't want to lose 2-3 years into a project where you could have invested it elsewhere. Very important to buy into a reputable developer, reputable builder. And just to cover on the market update, and in this slide right now, there's some incredible incentives that are being offered by builders at this time, and this is really the time, if you were ever considering pre-construction, to get in, because not only are you able to take advantage of those incentives and scoop up a unit, whereas last year, I remember, if there was a project that was in high demand and you wanted let's say a 1-bedroom unit, good luck. Even platinum agents weren't able to get those 1-bedroom units. You really had to be lucky to get one, or you'd get maybe 1 or 2 allocations of 1-bedroom units, and not the most favorable ones either. So right now, more than ever, you have the options to really get a unit that you really like, get in with the incentives that you really like, and not have to worry about whether I'm going to get a unit or not. Having said that, you also want to make sure that you buy into the right project and the right developer, and not just go with any project out there, because there's tons of projects out there that are launching every single day. We only work a handful of projects, and we handpick the developers and builders that we want to work with because we deem them reputable, and we know their track record, and we know what kind of product they turn around with. With that said, I want to talk about a few projects that are out currently that are very, very exciting. I want to talk about 3 on today. One of them is in downtown Hamilton, prime location, called 75 James. The second one, we've got above condominiums coming out in Mississauga, right at Ontario and Bristol, very, very close to Square One, just a couple stops away. Again, prime location, going through a lot of development. And lastly, we've got Westbend by Mattamy Homes in Hyde Park, right at Bloor and Keele, just steps from the Keele subway station. So we're going to just go over very quickly what the projects entail, the deposit structures, and what they look like.
Just before we start, guys, I realize that there's been a number of questions being asked in the Q&A. We will get to the Q&A section. Thank you for your questions. Keep them coming. As soon as we are done with our projects, we will go ahead and start answering those questions. There's very good questions there. We'd love to answer them. So without further ado, the number for the first project, 75 James, smack downtown Hamilton. It is right at James and Main Street. I truly love Hamilton. I've always had a soft corner for Hamilton. So from day one, it has really gentrified over the years. It continues to gentrify. You should really go out to Hamilton to feel like what's been happening. So it's been built by Fengate. Proud investors Luna and High Rise Group are the project managers. It's a tiered building, so the building is going to be we'll show you the picture right after this, but total at 616 suites. They're going to be starting from a studio all the way to a 3-bedroom plus den. The smallest unit you could buy is 345 square feet, all the way to baller suites of 1,446 square feet. There's about 330 parking spots available, very few visitors parking spots, 15. There's also EV spots available there as well, 500 or so biking paths. Now, if you want to learn more about the project, again, Sid has a link on the calendar invite if you want to see what Hamilton is all about, if you want to learn more about Hamilton, and why Hamilton makes sense. If you're a West Ender, and you know Hamilton well, then again, book a scheduled call with us. We'd love to go over some of the project details on why this would make a great investment property. The closing on this one is in 2026. Deposit structures here are going to look like $5,000 on signing, the balance to 5% after 30 days, 2.5% after 80 days or 180 days or 6 months, 2.5% after 240 days or 8 months, 2.5% in 540 days or 18 months, and then 2.5% in 720 days, which is 2 years. So this is what Sid was really talking about earlier. Pre-construction really gives you the opportunity to slowly work towards your deposits and then be able to save. Now you have a target to achieve. You know exactly how much you want to save. You have to save up, in that 6 to 8 months to 2 years period, and you work towards saving that. Here, I haven't seen these prices also in a very long time, especially during COVID. There was nothing existing in $400,000 range. But now we're starting to see pricing in the low 400s, not even, I think the cheapest unit they had was like $420,000. One bedroom starting in the 500s, 1+den in the mid 500s, and 2 bedrooms in the low 600s. One other fact that we also learned about Hamilton, if you guys are truly looking to invest in Hamilton, if you guys are investors in that region or want to learn more about that, the price per square foot for rent in Hamilton actually is $4 a square foot, which is extremely crazy. There is a newer building right across the street from 75 James. They're renting the studios at $1,800 right now. 1 bedrooms at $2,200, and 2 bedrooms at $2,600 a month, which would really be very comparable to some of the neighborhoods in Toronto.
Yeah, I mean, this project is really great because Hamilton, I don't know if you guys are very familiar with Hamilton real estate, but the values there are much lower than Toronto, but the rentals are very competitive with Toronto when it comes to rent. So you've got McMaster, you've got a couple of other colleges, you have really a lot of development happening, a lot of people moving out there. I'm a huge fan of pre-construction projects where the government pumps in a lot of money, because that just goes to show that there's going to be a lot of expected growth coming. And just the Hamilton waterfront area, which is about 10-15 minutes away from this site, the city of Hamilton is pumping out over $140 million in just revitalizing the entire waterfront. And that's really going to drive a lot of growth, new jobs. There's so much happening in Hamilton. It's really exciting. The long play in Hamilton is amazing. Great value. It really reminds me of Toronto from, years ago. So a really good time to get in, especially with these prices. But just to correct Saurabh, we have seen these prices before in Hamilton, but it's just that, nobody ever got a chance to get a unit.
That's very true.
So prices haven't gone down. They're still more or less the same, but you now have an opportunity to actually pick something up.
In the low 400s.
Exactly. Okay, so I want to talk about another project in Mississauga. I love Mississauga. It's just the city right beside Toronto, where a lot of people choose to live and work. It's an easy commute off the highway. This is a project by RioCan and Marlin Spring, 2 big giant developers out of Canada. The location is at 30 Bristol Road. A total of 577 units split between 2 towers, 17 and 23 stories each, connected by a podium. And I believe the podium has over, I think, close to 200 units, but I'll double check my number. One of the things I love about Mississauga, and especially this particular project, is it's right in front of the future Hurontario LRT line. The Bristol station will be right next to above Condos, making commute very easy for people that are looking to go station or Square One or just their place of work. Completion date here is 2024 fall. For the Hurontario LRT. The project completion date is 2026. So the LRT will be ready before the project's ready. What else? There's a lot of parks and recreation around the area, really good bike and walk score. You've got downtown Toronto just 35 minutes away, Pearson 15 minutes away, and the Bristol LRT just a short 1 minute away. I'm a huge fan of being right in front of transit. Studies have shown that being within 500 meters of transit increases the value of your condo by 30%. So I love transit. This reminds me of a project that I purchased last year in Mississauga, also on here, Ontario, called Alba Condos by Edenshaw Developments. I bought a 1-bedroom there, and I'm right along the LRT as well. So very exciting. I love projects like these. I'm going to talk a little bit about the prices here. Or actually, let's start with the deposit structure. We've got 5% deposit per year, got $10,000 on signing, balance to 5% in 30 days, 5% April 2023, and then 5% in April 2024, a whole year after. And then you've got the last 5% on occupancy summer of 2026. So really nice and stretched out deposit, which is nice and gives you a lot of time to save. Studios here starting in the high 400s, 1 bed starting in the mid 5s, 1+ den starting in the low 6s, and 2 beds starting in the mid 700s. Again, any questions on any of these projects, guys, make sure to contact us. We'd love to walk you through and give you more details on information on these projects.
One other thing, just to add to Sid's point, is all these 3 projects. One of the top reasons we like all these 3 projects, of course, is location. Sid talked about transit. All 3 of these condo projects that we're pitching to you guys today, all 3 of them are walking distance to either the LRT, to either TTC, or to the GO train station. So, for example, 75 James is less than a minute walk to the Hamilton GO train station. Sid touched on above condos. It is also less than 1 minute walk to the new LRT in Mississauga. And then the next one that we're going to talk about right now is Westbend. It's by Mattamy Homes, right at Keele and Bloor. It is 10 steps. It's actually right on top of the subway station. You just come out of the building and you turn around and the subway station is right there. It's 10 steps from the subway station. The biggest builder in Canada, Mattamy Homes. The address is 1660 Bloor Street West. 12 stories with the rooftop amenities. There's 174 suites, starting from studios all the way to a 3-bedroom with a massive terrace. The ranges of the suites, there are 427 square foot to all the way to about 1,122 square feet. Some of the amenities are listed below. I truly love buildings that do not have a pool, simply because it just automatically generates more in terms of maintenance fee. So again, this particular one also does not have a pool. Concierge, pet spa. There's a whole list of amenities and then some. Next slide, Slits, just to go over some of the extended deposit structure. This is the only project. Now, if you guys are lovers of High Park, you could just walk to High Park from here. It's less than a 5-minute walk to the High Park entrance. Extended deposit structure. This is the only project out of the 3 that we're bringing to you guys today that has a 10% deposit. The other 2 projects had 15% down. This one only has 10% down. It's $10,000 on signing, balance to 5% in 30 days, 2.5% in 120, which is about 4 months, and 2.5% in 8 months. And that's it. Like, you are able to secure a unit here for as less as $60,000 to $65,000 down. The occupancy here is early 2025. Sid had touched on this at the beginning of the presentation, that most of these projects take a little bit longer to occupy. So I would say here occupancy fee is most likely going to be mid to end of 2025. 1-bedroom starting in the mid 600s, 1+ den in the 700s, junior 2 bedrooms in the low 800s, 2 bedrooms in the mid 800s, and then 2+ dens in the high 900s here. Couple of the other incentives that Mattamy is offering is 0 development charges. So Sid touched on that earlier. He kept talking about development charges and make sure development charges are capped. Well, in this particular project, there is no development charge. You don't have to worry about paying out of pocket. Whatever you see at price is all you pay at the end. There is no development charges, no park levies, no Section 32 levies, no education levies, so 0 development charge altogether. Mattamy is also offering a 1-year maintenance free. So how that truly works is, if you choose to go with one of these units, they will take your 1-year maintenance and credit you on closing. So amazing incentives by all of these 3 builders that they're offering in this market.
If you guys want to learn any more about these projects to see if they make sense for you or just a detailed analysis on these projects and just to see pre-construction makes sense to you, again, guys, feel free to book a call. We'd love to sit down with you one-on-one, a free consultation just to go over the pros and cons just based on your specific needs. With that, we are at the end. So thank you all for staying till the end. We've got some questions that we're really looking forward to getting to here by you guys. So thank you for submitting your questions. And we're just gonna get right into it, starting with the first one. Where do you think is the best area to buy pre-con? It's a great question. And I cover a lot on, how to invest, where to invest, and the things to look for invest. And for me, it really comes down to three things, right? Just outside of area is you want to make sure, of course, the location is important, but you also want to make sure you buy into a reputable builder, like we keep touching on. And you also want to buy into the right incentives with the project, okay? All three of those really give you a trifecta of the really good investment. In terms of areas, it really depends on what your goals are. I'm a fan of buying into areas that are going through revitalization, gentrification, that are really low in value right now, but are going to experience future growth. I love areas where the government's putting a lot of money because, again, entry point's low, but you're going to see those returns over time. Great example of this is the east end of Toronto, Corktown, Regent Park. I think Saurabh has a couple of condos out there that he purchased that are coming up right now that have done quite well. Those are great areas that have transit very close to them. Again, I'm a huge fan of transit. You want to make sure you buy in front of transit. You want to pick an area with low vacancy rates because, again, that's a sign of a good investment opportunities if you're looking to rent them out. Anything you want to add to that, Saurabh?
I think you touched on it right there. Like transit is very important too, guys. Like as to Sid's point, that's why we picked all the projects that were close to transit, simply because I think for the most part, a lot of these builders. A couple of years ago, the city of Toronto said that there was no more requirements to have parking for builders, that there was no more requirement for the builders to have one-on-one, one-to-one parking to unit mix. And simply because the builders, one of the biggest costs is actually to dig down. So if they're digging down 4 to 5 parking levels, that's where a majority of the money was going. Hence, you see now that a lot of the one-bedroom studios, 1+10, don't even qualify for parking. So you want to make sure that you guys are picking that location, that perfect ideal location that's very close to transit, so that when you guys are either for yourselves or as investors, you are looking to rent these things out, it's a much easier sell to tenants. You are able to generate more in terms of rent and in terms of also resale value. Typically, anything close to a transit does really well. Sid also touched on, regentrifying neighborhoods. I love regentrifying neighborhoods. I've always, for the most part, bought in regentrifying neighborhoods as well. That's why I've been able to do well. We talk about Toronto stats or GTA stats in general, but if you were to truly dig down into the stats of Toronto in general, you will see that some neighborhoods do better than others. So again, if you want to learn more about, what neighborhoods you're thinking about, if you want to hear our opinion, scan that code, book a call with us, and we'll be happy to go over some of our, some of the neighborhoods that you're thinking about and what you should think about as you're investing in that neighborhood.
All right. Next question, Saurabh, is if we book a condo now and close in 5 years, can we refinance immediately after closing or need to wait? If yes, how much to get the finance for the appreciated cost?
Yeah, great question there. I'm going to just take a wild example here. So let's just pretend that you bought something the immediate answer is yes. You can refinance immediately after closing. So what you would do is you would go to the bank, you would say, hey, the value of my property has gone up X amount, and then take your money out right away. So what the banks would allow you to do is they would allow you to take up to 80% of the new value. So let's just say you bought a condo for, I don't know, $500,000. And you put down 20% altogether on it. So you have to take a mortgage of 400,000. Let's just say that now the new value is 700,000. What you're going to 80% of that is about 560. So you would take that $160,000 and you would refinance it, either in terms of a mortgage or a home equity line of credit. And there are some advanced strategies that you guys can utilize in terms of either taking a bigger mortgage and then paying a higher mortgage, or be able to have some flexibility, taking the shorter mortgage of 400,000, going back to the bank and saying, hey, Mr. Bank, the value of my home has now increased. Please give me a home equity line of credit. You'll be able to take a home equity line on it. It's a lot more flexible in terms of payments. You're only having to make interest-only payments on a home equity line. That's a strategy that I utilize the most amongst my portfolio. That's how I continue to invest, using a home equity line. So again, it's one of those strategies because it gives me flexibility of payment. I'm not stuck to a mortgage. I can pay it down or take it out as much as I can. So it's probably the strategy that I would utilize the most. Is instead of taking a mortgage out, you would probably want to get the mortgage and then a home equity line on top of that.
Yeah.
I hope that answers your question. If you have a follow-up, please put it on the chat. So you want to take the next one? Or you want to?
So what are some options if you buy a pre-con and decide to close, but are having a hard time with obtaining a mortgage? Are there any options at that point other than assigning? Great question. Like Saurabh had mentioned in the beginning of the presentation, that when you buy pre-construction, you really should be buying pre-construction with the plan A being to close and hold property, right? We're big fans of buying and holding property. We're not fans of, we never advise clients to buy just to flip. Okay. Although you can certainly make a lot of money, and our clients have made a lot of money, you always want to plan to close and hold property long-term, because of course you want to be able to generate wealth long-term. Now, having said that, things happen when you buy pre-construction now, and it takes a few years to build, let's say 3-4 years. You don't know where you're going to be in 3-4 years, your financial situation, where you're going to end up. Hopefully in a better position, but if not, what do you do? And if you don't want to assign and you still want to hold on to it, well, you do have a couple of options, and I'll give you an example of something that one of my clients had just done recently. Is you can go in with somebody else and close on the property. So a client of mine actually bought something 2 years ago into a project. He bought a 1-bedroom, and with the intention of obviously, closing on it. And now because of COVID and all these other unforeseen circumstances in his personal life, he knows that his occupancy is coming up, because you do get a lot of heads up from the builder prior to occupancy. The fact that you have to get a mortgage soon after that he won't be in a position to do that. So what he did, and what I advised him to do at that point, is to find a partner who he can go in with and who you can use to finance the property and close on it together. And that, so he doesn't have to sell it. Okay. And this is very common that we see quite a lot. It doesn't have to be a family member. It could be somebody that Saurabh's a huge fan of always telling people to get a joint venture agreement in place. And that's something that we always advise as well. Get a lawyer to draft a JV contract in that instance. One of the things you can also do to just be proactive from the get-go is something that our lawyer, Harry, advises clients, is to add purchasers, not on title, but just send him names of family members and potential people who you may want to add on closing, should you not be able to qualify for a mortgage. And I love the fact that he urges clients to do that, because it's true. You don't know if you're going to be able to close on it, and if you have financing options at that point. So there are options. You can always close with somebody else. Maybe Saurabh, you want to touch on that further?
So a great question, by the way. There's a couple other strategies you guys can employ as well. I right now personally, I'm sitting on way too many properties, so I do not qualify for a lender. So yes, you can go back and do a joint ventureship partner. And if you want, again, a copy of a joint venture agreement, please reach out to us. Schedule a call. Just send us an email or call us, and I'll be happy to send you my joint venture agreement that I have worked on over the years, just to see how it looks like. Another option for you would be to go to a B lender. B lender are much more flexible than your primary 5 lenders, which is your big tier A banks. And at some point, once you continue to invest, you are going to get tapped out from all of these banks. You'll have to go to a B lender. So to answer your questions, if you're not able to, or if you're not comfortable doing a joint venture agreement, look at the B side. Yes, you may end up paying, 1%, 1.5% more to close on that mortgage, but that's an option definitely available to you as well to go on the B side. But to Sid's point, find joint venture agreements, even if you don't have, if you can't close by yourself.
Awesome. Next question we have is, would you rather get a bungalow or a 2-bedroom condo, Saurabh?
So a great question. I love this question because I get this question all the time. It truly depends. It really depends on what kind of investor you are. I have typically found over the years that it's, for me personally, it's much harder to not, as I get more and more busy. I have a 4-year-old daughter at this point. Anything that's freehold, bungalows, it just takes a lot more maintenance, and it takes a lot more hand-holding to a tenant. You may get more calls. Whereas on the other side, I have a 2-bedroom condo that I've had since 2010 in downtown Toronto. I've had 3 tenant flipovers, and over the years, I could really count in my hands. I've probably gotten, in 10 years, maybe like 4 calls. So it really truly depends on what kind of investor you are. If you want to be a more hands-on investor, then yeah, sure, go for a bungalow. If you want to be hands-off, if you want to really like diversify your portfolio, like really scale, and don't want to go with a property manager, which I would highly advise that you do ultimately, then you go for a condo living. Condominiums are just in general are just easier to manage.
Yeah. Just to add to that too, Sarab, question we get asked a lot is, whether they should buy resale or pre-construction. There's no right or wrong answer. They're both great investments as long as you get into real estate, really. But again, like Sarab said, it comes down to your goals, what you're trying to accomplish, your long-term goals. I just had 2 clients over the last week who purchased pre-construction because they don't qualify for a mortgage yet because they don't have enough down payment saved. And we see this all the time. People that are looking to get in the market, or they're looking to just have extra cash lying around, but they don't want to take on a mortgage just yet. So, but there are clients who want to get into the resale market and take advantage of the lack of demand right now and have options and be able to negotiate on resale prices right now. There's a lot of good deals out in the resale market at this time. It just depends on how active you want to be and whether you want to take on a mortgage. So the answer really depends on your situation, your circumstances, what your goals are. So highly advised, book a call to sit down with us to go over that scenario and just see which strategy works best for you. Last question before we have to wrap it up, guys, is we'll take one more. When did you buy your first pre-con? Sarab, you want to answer that first?
Yeah, sure. So I bought my first pre-con back in 2008. So 2007 is when I bought my first property. 2008 is when I bought my first pre-construction. I still own that property to this day. I used to own a lot more properties in Waterloo over the years that I have offloaded simply because I now focus primarily on within a 30 to 45-minute drive of me. That's just personal. I just want to be very central with all my properties. It doesn't mean that, Waterloo is not a great investment opportunity. It truly is, but it's just that I want to be more central at this time. So yeah, back in 2008, I wish I could go back and buy like 30 more.
Yeah. My first pre-construction property was back in 2015, I think end of 2015. I ended up buying I still have this property, Lakeshore and Park Lawn. Was the developer there was Ani, Westlake Encore project, about a 2-bedroom there. Still have it. I've used that property now to refinance and purchase additional properties. It was a great investment. And that's one that's very close to and dear to me. So I'm hoping to hold on to that as long as I can. Again, it's one of those areas that was up and coming. It hadn't seen a lot of development, and now it's just exploding with growth. If you guys are familiar with the Etobicoke and the Christie's lot, I'm right across from it. And that Christie's lot is now also going to experience massive growth. They're proposing a go station there. So hopefully that'll also further increase the values of my condo that's there now. But that was my first pre-construction property.
Amazing.
Thank you all.
Actually, we have another question, Douglas. Douglas, sure, we'll reach out to you just to assess what your needs are. Thank you for that question. If you guys have any other questions.
Any other questions? We're here for another minute or so. I'm also posted another link to the Calendly link. If you guys want to, again, sit down with either Sarab or myself and just go over, pros and cons of pre-construction, whether they're right for you or not. We're here. We'd be happy to answer any questions and just go on an individual basis to see if it makes sense for you.
Or even if you guys are looking at resale, guys, like as I mentioned earlier, there's tons of resale opportunities outside of pre-construction as well. There are, as long as you guys are okay with, being cash flow negative for a bit because of these high interest rate environment. There's tons of deals out there, even on the resale side, rightfully so, because we're sitting at almost 6% interest rate. So again, if you want to book a call to see if pre-construction makes more sense or if resale makes more sense, if you're looking to invest in your first property or your 10th property, if you want to just discuss your portfolio, your goals, go ahead and schedule that call, and we'll be more than happy to chat for you for about 15-20 minutes.
All right, guys, thank you all so much for being here. Thank you for your time. We appreciate it. We look forward to hopefully connecting with you and helping you guys out with your need. We'll be doing more of these, so stay tuned, and we'll see you guys again, hopefully very soon. See ya.
Thank you, everyone.